$10.03 billion in revenue, up 38%. AMD just shocked Wall Street. And while everyone was watching NVIDIA EPYC, Lisa Su made a much bigger prediction. The server CPU market could hit $120 billion. Now suddenly, AMD isn't looking like the backup player anymore. Hey everyone, on Deep Dive Stock Earnings. Here, we don't just look at price moves, we break down the logic and trends behind them. If you want to truly understand how the market works, make sure to like and subscribe. Let's get right into it. AMD reported $10.03 billion in revenue for the first quarter, up 38% year over year, and well above Wall Street expectations of $9.85 billion. Even more impressive, earnings per share came in at $1.37. Beating estimates of $1.27. This combination of explosive revenue growth and strong profitability showed that AMD executed almost flawlessly this quarter, and it immediately reignited bullish momentum in the market. In the stock market, nothing proves a company's strength more than beating both revenue and earnings expectations by a wide margin. And AMD didn't just beat expectations, it crushed them. The company basically told Wall Street that its growth story isn't slowing down at all. If anything, it's entering a new phase of accelerated monetization. And for bearish investors betting against AMD, this quarter was a direct punch to the face. If you break down AMD's business segments, you'll notice something important. The company's entire business structure has fundamentally changed. Its data center division generated a record-breaking $5.08 billion in revenue this quarter, up 57% year over year. That means data centers have officially replaced traditional PC chips as AMD's main growth engine and profit machine. This is what I call a structural transformation. Years ago, people saw AMD mainly as a PC CPU and gaming GPU company, a highly cyclical hardware business. But now, more than half of its revenue comes from hyperscaler and enterprise data centers. That means AMD has evolved into a true cloud computing and AI infrastructure company. While the entire industry remains obsessed with EPYC, Lisa Su introduced a completely different argument during the earnings call. As inference workloads and agentic AI continue to explode, systems now require enormous amounts of CPU compute power to coordinate and orchestrate data before it even reaches the GPU. That trend helped drive AMD's EPYC server CPU business up more than 50% year over year, marking its fourth consecutive record-breaking quarter. While everyone is standing in line for NVIDIA EPYC, Lisa Su pointed out a blind spot most investors are missing. As AI agents become smarter and more autonomous, the pressure on data orchestration grows exponentially. And without powerful CPUs acting as the system coordinator, even the best EPYCs become inefficient. That's exactly why AMD's EPYC processors are becoming critical infrastructure for large-scale AI systems. Based on rising demand from agentic AI workloads, Lisa Su made one of the boldest forecasts of the entire earnings call. AMD raised its estimate for the total addressable server CPU market in 2030 from $60 billion to more than $120 billion. To capture that opportunity, AMD plans to deploy its next-generation Zen 6-based Venice processors and AI-optimized Verano chips as key weapons for the next phase of competition. This tells us AMD is probably seeing much stronger demand internally than what investors can currently see from the outside. Venice and Verano could become AMD's secret weapons for taking even more server market share away from Intel. And if Lisa Su's forecast turns out to be correct, AMD's server business could still be in the very early stages of growth. If Q1 was impressive, AMD's second-to-quarter guidance was the real shocker. The company expects Q2 revenue to reach $11.02 billion, implying year-over-year growth of roughly 46%. At the same time, AMD expects non-GAAP gross margins to hit 56%. That sends two powerful signals to the market. First, supply chain constraints across semiconductors are easing significantly. Second, enterprise demand for Zen 4 and Zen 5 platforms is accelerating fast. On Wall Street, guidance matters just as much as current results. 46% growth with a 56% gross margin tells investors something very important. AMD isn't just selling more chips, it's selling higher value chips at better margins. That kind of operating leverage usually means customer demand is getting much stronger. And with supply constraints finally improving, AMD can now scale shipments much more aggressively. AMD also announced a major expansion of its partnership with Meta. The two companies are now working together on deploying up to 6 gigawatts of AMD Instinct GPU compute infrastructure. But even more importantly, They're jointly developing a customized AI GPU based on AMD's next-generation MI450 architecture. Specifically for Meta's future AI workloads, shipments are expected to begin later this year. 6 gigawatts of AI compute isn't a normal hardware deal anymore. This is a strategic alliance between the tech giants. One of the biggest fears among hyperscalers is becoming too dependent on NVIDIA's supply chain. So the fact that Meta is willing to co-design customized AI chips with AMD says a lot. And once those customized MI450 systems start shipping at scale, NVIDIA's dominance at the high end of AI accelerators could finally face serious pressure. Of course, despite the strong quarter, bearish concerns still exist. AMD's valuation remains very expensive, meaning the market has already priced in near-perfect execution. That leaves very little room for mistakes. And perhaps more importantly, NVIDIA's CUDA software ecosystem is still one of the strongest moats in the entire AI industry. AMD's hardware may be competitive, but catching up on software adoption is a much harder challenge. On Wall Street, high valuation itself can become a risk because the moment execution slips even slightly, stocks can get punished brutally. And the software ecosystem issue is real. Developers are deeply entrenched in CUDA, and switching platforms takes both time and money. So AMD's current rally still comes with some walking a tightrope risk attached to it. The company basically has to execute almost perfectly every quarter. But bullish investors also have a strong argument. AMD is already becoming one of the dominant players in the x86 server CPU market and continues to take share away from Intel. Even if companies buy NVIDIA chips, many of them still rely on AMD EPYC CPUs to run the system. And perhaps most importantly, major AI players like Meta and OpenAI are actively helping AMD strengthen its software ecosystem in order to reduce dependence on NVIDIA. That positions AMD as one of the most balanced and strategically important AI infrastructure companies in the market today. Overall, AMD's report wasn't just strong numbers. It showed a real strategic shift with server CPUs rebounding and Meta getting closer. AMD now has two powerful growth engines. It's no longer just chasing NVIDIA. It's building its own lane. So, can Lisa Su turn CPUs and custom chips into a real challenge? Or is the stock already priced for perfection? This is Deep Dive Stock Earnings. See you next time.